What is an LLC? Today I'm going to talk about the most important things that everyone should know about starting and owning an LLC. Because if you don't have certain things dialed in, then you may put yourself in a position where your LLC and your business fails. Okay, so number one, LLC stands for Limited Liability Company. And this is a type of legal entity structure that you can set up when you start a new business. Now, the reason why it is so popular is because of the limited liability part, which basically means that only your business is held liable for any potential damages that happen to your clients, your customers, your employees, and so on, and not you personally. So for example, if someone sues your business and you lose, then that person can only go after the assets that are within your business. And the last thing you want is for business to be booming and then suddenly, oh yeah, things are booming. Hey, wait, where did all my personal assets go? And that's what we don't want to happen, right? But thankfully, if you set your business up as an LLC, then your personal assets can be completely safe, which gives you a sense of security through having a legal shield. But look, having a legal shield is just scratching the surface of what an LLC is all about. So in this video, I want to simply cover the 6 or 7 most important things everyone should know about having an LLC. So if all that sounds good to you and you appreciate the quality of our videos, please consider clicking the like button for the YouTube algorithm. That way other people like you can find this video about what an LLC is and subscribe for more great business and tax videos. Stay tuned. Hey there, and if you're new, welcome to our channel. I'm Sean with Life Accounting, the accounting company that helps you save on taxes and build more wealth. As always, before we dive in, I want you to know that I'm gonna put the timestamps for this video somewhere down in the description below so that you can skip to the part that you want to learn the most about. But as always, if you are completely new to what an LLC is, then I recommend watching the entire video. Okay, let's go ahead and get started with my list, starting with number 1, asset protection. So I already mentioned how an LLC can protect your personal assets, but what you need to know is that an LLC does not protect your business assets. And this is something that many people don't realize. They think that an LLC protects them from everything. But look, it does not. Quite often, people would love to acquire business assets, right? Like you may want to acquire a business vehicle that you can write off tax-free, or you may want to put real estate properties into an LLC, or even buy equipment like phones or computers or studio equipment within your LLC. But look, LLCs do not protect your business assets. So if someone sues your business, those can be up for grabs. Now, the 2 big things that can protect your business assets are going to be contracts and business insurance. Okay, so if you are going to engage someone in business, then you want to explicitly state what you are going to do and what you are liable for in your contract. And in the event that you don't cover everything in your agreement or in your contract, then you better have business insurance that can help you in case there is a claim filed. All right, let's move on to the second thing you should know about LLCs. Number 2, how is income and pay reported as an LLC owner? Now, one of the key things to understand about paying yourself as an LLC owner is that it is kind of already done for you. Let me explain. So as a default LLC owner, you are paid based on the profits of the business. So not how much money you transfer to and from your personal bank account, but rather what the business actually made. So as a hypothetical example, if you had $10,000 in business revenue and then you had $5,000 in business expenses, then your business profits would be $5,000. And so you will report $5,000 in income on your taxes. And this is basically what you have paid yourself in the eyes of the IRS. Also, paying yourself is not as simple as issuing yourself a W-2, even if you are actively working on your business, because how you pay yourself depends on how the LLC is structured. So as a 100% owner of a single member LLC, you pay yourself with distributions, and all the profits are reported on your individual tax return. As a part owner of a multi-member LLC, you also pay yourself with distributions, and profits are reported on a partnership tax return, and your share of profits will be sent to you in a K-1 document, which then would need to be reported on your personal tax return. And finally, as a corporate LLC owner, if you are working in the business, then you need to pay yourself a reasonable salary, and then the remaining profits are passed on to you as distributions to be reported on your individual tax return. Okay, and these are things that you need to understand at a high level when you have or when you start an LLC. But paying yourself can get a little bit deeper, and we'll definitely have more videos that talk about how you should pay yourself as an LLC owner or other business entity structures. Okay, moving on to number 3, you should know how LLCs are taxed. Okay, the IRS and the federal government references LLCs as disregarded entities, which basically means that the business entity is not taxed directly, but instead the owner will report the income on their individual tax return. So for example, if you have a single member LLC, then all the income and all the profits will be reported on your personal tax return as if you were a sole proprietor or independent contractor. Same thing if you have a multi-member LLC or business partners, except for the fact that as an owner of a multi-member LLC, you will need to file a separate tax return to show which profits belong to which owners. And then each owner will report their share of profits on their individual tax return, which will be taxed at their individual tax bracket. Now, the beautiful thing about LLCs are they can elect to be taxed as corporations, which gives the owners of the LLC many strategic tax benefits and outcomes. For example, electing an LLC to be taxed as an S corporation can allow the business owners to avoid paying self-employment taxes on profits or distributions, and in many cases, this can help save entrepreneurs $10,000 or more in taxes during one tax year. But there are definitely times when it makes sense to exercise these tax elections like an S Corp status, and there are times when you should definitely not. And I have a great video where I break down the disadvantages of electing your LLC to be taxed as an S corporation, which I'll link somewhere down below or at the end of this video so that you can watch that after you finish this one. Also, if you need help with tax planning or tax preparation and you want to work directly with my team one-on-one, then consider working with us by clicking the first link down in the description below. Okay, the next thing you need to know regarding LLCs is number 4, business credit. So having an LLC allows you to do 2 things very, very well. Okay, number 1, it can help you build business credit, which of course, business credit can allow you to get funding for more business growth. This may help you get the equipment you need or the inventory you need, or even hire the people that your business requires. And when you have an LLC, your business has the ability to establish credit separately from you as an individual. Because when you have an LLC, it is recognized as a separate legal entity with the ability to enter its own agreements, its own contracts, again, being completely separate from you as an individual. So the LLC would have its own records of payment history, number of accounts the business has opened, the length of the credit history of the business, the amount that the business currently owes, and so on. On the other hand, if you are a sole proprietor or independent contractor, then there is no legal or financial separation between you and the company, which means you need to rely on your personal credit to get funding, which is a great segue into my second point on business credit. Number 2, credit protection. Because not only can your LLC protect your personal assets, but guess what? It can also protect your personal credit. Think about it. If someone sues your business and you lose without a limited liability company or some type of business entity that is separate from you, then that judgment could appear on your personal credit report and other public reports up to 7 years, which of course makes it very difficult for you to do things as an individual, like buy a home or get a new vehicle or do anything personally like that. But with an LLC, only your business credit report would be impacted unless, and this is very important to note, okay, unless you personally guarantee a loan or a contract. Because oftentimes when you apply, especially when you apply for a business credit card, there are clauses in your agreement which states that you are personally held liable for any debts or any outcomes associated with the business, which means that now your personal assets and your personal credit scores could be on the hook for any business debts that you personally guarantee. Now, is all of this helpful so far? If it is, don't forget to like this video for the YouTube algorithm. And also, our YouTube stats show that only 76% of people who watch our channel are subscribed. So go ahead and hit the subscribe button while you're down there so you don't miss out on more of our videos. Okay, moving on to number 5, I have raising money. Now, something that is often misunderstood is that people think you need an LLC to get a business loan or a business credit card, which is simply not the case. But look, taking the time to form an LLC will certainly increase your chances of raising capital because it can show banks and other lenders that you are serious about growing your business. On top of that, as I mentioned in the last point, having an LLC allows lenders to check your business credit report. So once lenders can see that your business credit is solid, then you have a higher chance of getting funded by that particular lender or that particular bank. In fact, when your business credit is strong enough, then you can even get business credit cards without having a personal guarantee. Now, I have an entire video where I break down how to use business credit cards, which I'll link at the end of this video so you can check it out right after you finish. For now, let's move on to number 6 and talk about LLC costs. Many lawyers and accountants will charge a ridiculously high service fee to set up an LLC for you. But here's the truth, okay? Setting up an LLC is actually very affordable and easy to do. So I find that most people can end up setting it up for themselves for less than $300. Here's a quick overview of the steps you need to take if you want to set up your own LLC. So step number 1 is to choose an available business name. Of course, you won't be allowed to set up an LLC if that name has already been taken. Typically, your Secretary of State will have an online tool that allows you to run a name search to see what names have been taken. Also, as a quick tip, one thing that I like to do is to create a business name that someone can immediately identify and understand what the business is all about. For example, if you heard the business name Sean's Cleaning Services, then you probably would have guessed that it is a cleaning service company. So I recommend having names that people can immediately identify. All right, moving on to number 2, choose a registered agent. And here's where most people get tripped up and start trying to get an attorney involved. But look, the registered agent is simply the person who will receive the documents and all the correspondence on behalf of the LLC. So in many cases, the business owner can be the registered agent. Step number 3, prepare an LLC operating agreement. So some states require you have an operations agreement in place and some states do not. My opinion is that if you are setting up a partnership or multi-member LLC, then you better have an operations agreement in place that spells out exactly how the LLC will run. This means clearly stating the operations of the business, the members and the people involved in the business, the division of profits and losses of those members, the restrictions of selling or transferring members' ownership, the contributing capital balances and how those will work, and how the company will dissolve if it needs to, and so on. Because look, disagreements and partnerships happen all the time. And without a written contract to stand on, then you could find yourself in a heated legal dispute with your business partners. So creating an operating agreement can be as simple as finding an online template and following the instructions. However, if you know you will have complex operations or you will have complex management systems in place, then this is where you may actually want to start involving an attorney that can help you spell out everything clearly. Okay, step number 4 is to file your articles of organization with the state. So most states have this process take place online, and it is super easy. All you have to do is complete a form where you list your name, your address, and the purpose of your business, and then pay a small filing fee, wait a few days, and then bang, your LLC is active and ready for business. Now, setting up an LLC is great, but you've probably spotted throughout this video that there are key disadvantages of an LLC as well. So if you want to see my complete breakdown on all the disadvantages of an LLC, you can watch my video coming up next. Or if you've been told that you should have your LLC be taxed as an S corporation and you're wondering if that is actually a good idea, then you can watch my video on the disadvantages of an S corporation coming up next as well. And I'll see you over there.